Favorite stocks for next year?
Well, I like companies that have, that in my opinion still have great long-term prospects and are suffering from, what I would envision are short-term difficulties. And frankly, I don't want to invest in the things that have gone up 80 or 90%. We own stocks like Navios Maritime, Manpower, Activision. I mean, we have some big winners in our portfolios. That's why we're up 30%. I'd rather focus on the things that haven't performed, the materials sector. So names like Mosaic, names like Freeport-McMoRan, Copper and Gold, and even pure gold players, if you will, like a Newmont Mining. I like some of the consumer names, especially in the retail space that have been kind of beat up here. One of those is Target. I think Target is an excellent value investment and a relatively safe investment with a very nice dividend yield. Now, another company in that space, if you want to be a little more aggressive, is American Eagle Outfitters, the teen apparel retailer. American Eagle has a fantastic balance sheet, no debt, $2 a share in cash, stock price down 20% on the year. We're a market that's up, 25%, there are still bargains out there. And here's a company with a great dividend yield as well, over 3.5%. And that space, the teen retailing space, you go up and down with the fashion cycles, and frankly, you go up and down now with the economic cycles too. And so we had a tough time in the back to school season, tough time in the summer. And I believe those things are cyclical. If we believe the economy is going to grow faster next year than it is this year, I think we'll see a better backdrop, if you will, for the retailers. So retail stocks look attractive. I mentioned energy. Company like HollyFrontier in the refining space. Keep in mind the refiners had margins that were this wide, and then all of a sudden they contracted like this. Well, that's again a cyclical factor in my mind anyways, that ultimately will regress back to more of a mean. And so a HollyFrontier, believe it or not, continues to pay out a huge dividend. Yield there is 7% when you count in the special dividends that they have paid consistently over the last couple of years. So that's an attractive name. And then we also like the big oil majors, the international ones, like a Total out of France, and Eni, ticker symbol E, out of Italy. So lots of opportunities. I mentioned tech, big cap tech, certainly like Apple. And Cisco, given the beating it's taken here recently, I think is attractive. Intel, Intel has a dividend yield of 4%. IBM, another company that in my mind is still on track to make their $20 a share by 2015. It's stock trading at 175 or 180. That's an inexpensive company in any market, but in one where again, interest rates are so low and valuations are elevated for many companies, I think IBM is attractive as well.
Microsoft?
We can add Microsoft into that mix as well.
It seems to have been undervalued for 12 years now.
It has, and we haven't owned it for 12 years, but again, we've owned it for a while. But one of the things I think investors miss is that you're getting a big dividend. So when you think about total return on some of these companies, yeah, your stock price may not have gone that very far, but you throw in the dividends that compound over time, and you still get a decent return. So I like Microsoft, but Microsoft has actually performed a little better than the others here lately, with the Ballmer exit being a catalyst, which of course if you're Steve Ballmer, you're probably not too happy about having the big rally in the stock. But some of the other names I mentioned, haven't had the big rally up. Of course, I still like Apple, which obviously thanks to Carl Icahn has certainly had some interest from investors. And has run up from the low 400s to the 500s. But we've been in Apple a long time, having first bought it at $7 back in 2002, 2003.
That's great. Too bad Adam and Eve didn't have that kind of Apple.